Hello viewers, welcome to my channel. I'm Hashim Ali Khan. In this video, I'm going to explain you about those perquisites which are taxable only in specified cases. In the last video, I have explained you the meaning of the term perquisites and different types of perquisites. We can classify the perquisites into broad three categories. Those perquisites which are taxable for every employee. In all the cases, perquisites are taxable. First category. Second category, those perquisites which are taxable only in specified cases. And third category of perquisites which are tax-free, completely tax-free for everyone. In this way, we can classify the perquisites into three. First category, the perquisites which are taxable in all cases that I have discussed in the last 2-3 videos. So rent-free accommodation, concession in the matter of rent, and interest-free loan, and a number of other perquisites I have explained you in detail. Medical facilities given and free meals provided. All these things I have explained in the previous video. So hope my viewers are regularly watching in continuity all the videos. Then only you can be able to understand. If you join in between, you will not be able to understand it properly. So my suggestion, go to the playlist, select the subject income tax for the assessment year 2021. Select the topic income from salary, watch one by one video, then only you can be able to get the complete command on this subject. Because every video is linked with the earlier videos, right? So now in this video, I am going to discuss about those perquisites which are taxable only in specified cases. First of all, perquisites and fringe benefits taxable to specified employees. Now, specified employees. First of all, we must know who are called the specified employees. The specified employees has been defined, has been explained by the Income Tax Act by three. Employee director, then employee shareholder, income from salary is more than 50,000 per annum. These three cases are called specified employees. First one, employee director. Every director is not an employee. Only one director is there who is an employee as well as director. So employee director means he is serving in two capacities. He is a director and also he is an employee. Normally he will be called managing director, MD. So a person who is managing director, manager as well as director, employee as well as director, he is a specified employee. Secondly, employee shareholder. That means an employee who is also the shareholder holding not less than 20% of the paid up capital. 20% shares of the business, of the company, of the employer. That person is called a specified employee who is holding not less than 20% of shares of the company. Third, income from salary. Income from salary should be more than 50,000 per annum. In these three cases, the SSC will be called, the employee will be called a specified employee. And the following perquisites is taxable only if any one of the conditions is satisfied. That means the coming perquisites are taxable only if any one of these conditions are satisfied. If none of the conditions are satisfied, then the following perquisites are not taxable. The following perquisites are not taxable. So which are the perquisites? If the employer does not satisfy any one of the above three conditions, the following perquisites are tax-free, not taxable. So the following are the perquisites which are taxable only in specified cases. So 5 examples have been given by Income Tax Act. These are the perquisites which are taxable only for specified employees, not for everyone. The provision of car and other conveyances, first. Second, provision of services of servants. Third one, supply of gas, electricity and water. Fourth, educational facilities. And last one, transport facilities allowed by transport organizations. So these are the 5 examples of those perquisites which are taxable only in specified cases. Now one by one we will discuss. The first one is motor car. Motor car is provided by the employer to the employee. Then what is the value of the perquisite of this motor car? Income Tax Act has given the provisions how to find out the value of motor car provided by the employer. Now here you have to remember, if the employee owns the car and all the expense for running, maintenance are paid by the employer, then it becomes taxable to all employees, not only specified but everybody. Example, Mr. X is owning the car, he is having his own car, and all the maintenance running expenditure are paid by the employer company. Income Tax Act says whatever expenditure incurred by the employer is a taxable perquisite in the hands of the employee, whether the employee is specified employee or non-specified employee. For everyone, for everybody, the amount paid by the employer on running maintenance of the motor car is a taxable perquisite because the car is owned by the employee. That point you have to remember. Now, case 1. Now we are having those cases where the car is not owned by the employee, but the car is owned by the employer. And the employer has given the car to the employee. So it is a taxable perquisite. Now case 1. Motor car is owned or hired by the employer and the car is used by the employee for only official purpose. That means the car is given by the employer to the employee mainly to be used only for official purpose, no personal advantage. So the employer is giving the car to the employee mainly for using for official purpose, not a perquisite at all. He is not getting any personal benefit. He is using the car only for official purpose, business purpose. Taxable value is nil. Perquisite value is nil, no advantage. Second, if the car is owned or hired by the employer and the employee is using the car for personal purpose only. See here, employer has given the car to the employee only for personal use. Only for the personal use. In this case, what is the value of the perquisite? Income Tax Act has given the provision. Value of the perk is equal to actual expenditure paid by the employer on running and maintenance plus driver's salary plus depreciation on car at rate of 10% on cost. Suppose I am the employee and the company is the employer. The company has given me the car only for personal use. So I am using the car. The car belongs to company, but I am using it only for my personal use. Then Income Tax Act says whatever expenditure paid by the company on running maintenance plus the driver's salary plus 10% depreciation of the car will be the value of the perquisite in my hand. It is taxed, right? Note, if the car is hired, instead of depreciation, actual hire charges paid by the employer is taken. In this equation, depreciation will be taken only if the car is owned by the company. Sometimes the company has taken the car on hire and given this car to the employee. Then whatever hire charges paid by the company will be added here. Instead of depreciation, hire charges. Next, second, case 3. Now this is a ticklish one, difficult one. If the car is owned by the employer and the employee is using partly for official and partly for personal use. The car is owned or hired by the employer and the employer has given the car to the employee for both purpose, partly for official and partly for personal. That means car is used for both purpose. In that case, what is the value of the perquisite? Income Tax Act has given the rules. When expense for personal use are paid by the employer, that means all the expenditure, whether pay personal use or official use, every expenditure is paid by the employer. Then in that case, small car 1800 per month, big car 2400 per month. These are the amounts which are fixed given by the Income Tax Act. So when the car is given by the employer to the employee for both personal and official use, and all expenditure are paid by employer only, then small car 1800 per month and big car 2400 per month. What is small, what is big, I'll tell you later. Right now, you have to remember this too. When expense for personal use are paid by employee, the employer has given the car, but on the instruction that when this car is used for personal purpose, you alone have to pay. That means employee himself is paying the car. He is getting the advantage of only car. The running expenditure, petrol expenditure is borne by employee only when he is using the car for personal purpose. In that case, small car 600, big car 900 per month. If the personal expenses are borne by the employee himself, personal expenses are borne by employee himself, small car 600, big car 900. And if all expenditure is borne by the company itself, small car 1800, big car 2400. If the employer pays driver or chauffeur salary, add 900 per month to the car value. Actual salary paid should be ignored. Sometimes the employer will provide a chauffeur or driver. Then the driver's salary will be added. 900 rupees per month will be added to the value of this car. Whatever value you have already calculated, to that value 900 rupees per month will be added as driver's salary. Irrespective of actual salary paid to the driver. Ignore whatever is actual salary paid to the driver should be ignored. Only 900 rupees per month will be added to this value if the driver is also provided. Now, according to IT rules, if the cubic capacity of engine is less than 1.6 or 1600 cc, then it will be treated as small car. Here the provisions are given small car and big car. How we can be able to decide whether the car is a big car or small car? The Income Tax Act here has given 1.6 liters or 1600 cc. Both mean same. If the car's cubic capacity cc is less than 1600 or up to 1600, it will be treated as small car. If the engine capacity is more than 1600 cc, it will be treated as a big car. Normally it will be specified in the problem the car is small car or big car. If the problem is silent, you have to make the assumption. Assume that the car is a small car or a big car. Then providing car at concessional rate. Sometimes the employer will give the car at concessional value. That means some amount has to be paid by the employee to the employer for using the car. In that case, concession. We have to value the car as per the above rules. First, we treat the car as without any concession. Car is provided freely by the employer to the employee. We calculate what is the value of the perquisite. From that value, deduct the amount paid by the employee to the employer for using the car. That is the providing car at a concessional rate. Now, provision of service of servants. Car is over. We have decided what are the provisions of Income Tax Act regarding the provision of motor car by the employer to the employee. Now we are discussing about the service of servant. Sometimes the servants are appointed and given these servants to the employee for services. Employee are getting the services of servant, and this servant is provided by the employer. So if the employer provides the service of servants like sweeper, gardener, watchman and personal attendant, excluding cook, separate provisions are given regarding cook. So services are given of the sweeper, gardener, watchman or personal attendant to the employee or family members, then it is a taxable perquisite to specified employees. The value of perquisite is the actual salary or wages paid by the employer. Whatever the actual salary or wages paid by the employer to the servant, that is the value of the perquisite in the hands of the employee. That's all. So we have completed two perquisites. The first perquisite motor car, the second perquisite services of servant. And these perquisites are taxable only in specified cases. The specified cases are employee director, employee shareholder or a person whose salary income is more than 50,000 per annum. Okay, we'll continue the same discussion in the next video. Hello viewers, welcome to my channel. I'm Hashim Ali Khan. So presently I'm giving the lectures on the topic perquisites. So while calculating income from salary, the main complication, the complicated part to remember are the provisions of perquisites. Regarding the first head salary, not much complications. Already I have discussed. We have done the problems. Then second, allowances. We have done the problems on different allowances. But the more important part is to remember the provisions of perquisites. The perquisites are those benefits which are provided by employer to the employee or their family members in cash or in kind. Those are the perquisites. And broadly, perquisites are classified into 4 categories. That is, first one, perquisites taxable to all employees. Second one, perquisites taxable only in specified cases. Third, special perquisites, and last, tax-free perquisites. So far in the previous video, I have explained you all the perquisites which are taxable in all cases, like rent-free accommodation, etc. Second category, perquisites taxable in specified cases. So which are specified cases? An employee director, an employee shareholder, or a person whose salary income is more than 50,000 per annum. So these are specified employees. To these specified employees, 5 types of perquisites are there which are taxable. For others, these perquisites are not taxable. So which are the 5 perquisites which are taxable in the hands of specified cases? 2 perquisites I have already discussed in the previous video. That is motor car provided by the employer to the employee. Second, the services of servants which are provided by employer. These 2 already I have discussed in the previous video. Now I am continuing the discussion. The third perquisite is this one: supply of gas, electricity and water. Sometimes the employer will supply the gas, electricity or water to the residence of the employee. The employee is getting the benefit free of cost. The employee is getting these services from the employer. Income Tax Act says it will be taxable. But this is taxable only if the SSC is a specified employee. Now what are the provisions? If gas, electricity and water supply connection are in the name of the employee and the employer pays or reimburses the bill amount, then it is taxable to all employees. One point you have to remember: if the connection of water, gas or electricity is in the name of the employee, but the employer pays the bill or reimburses the bill, then it is a taxable perquisite to all employees, not only to specified but everyone. The condition: the connection should be in the name of the employee, then only it will become a taxable perquisite to all employees. Second, if gas, electricity, water and connections are in the name of the employer and the employer pays the bill amount, it is taxable perquisite to specified employees. The difference is, in the first case, the connection is in the name of the employee. Second case, the connection is in the name of the employer. The gas, electricity, water is in the name of the employer and the employer supplies this. Then it will become a taxable perquisite only in specified cases, specified employees. Third, if the employer is owning the resources of water, gas, electricity and not purchasing from outside, then the value of the perquisite is the cost to the employer. Number of units consumed into cost per unit. Sometimes the employer will supply this gas, electricity and water from their own resource. It is not purchasing from outside agency. It is providing from its own source. Then Income Tax Act says it's a taxable perquisite in specified cases only. The value of the perquisite is number of units consumed by the employee into cost per unit. In this way we can find out the value of the perquisite. So these are the provisions regarding supply of gas, electricity and water by the employer. These provisions you have to remember. Listen carefully. This income tax subject is a tough subject because you have to remember so many provisions. So until and unless you have the patience to watch the video till the end, without that you cannot be able to solve the problem. So if you want to get the complete command on the subject, if you want to get more knowledge on this subject, watch the video with patience till the end. Because in the coming problems, all these provisions will come. If you are unaware about these provisions, how you can be able to solve the problem? Now, next one is educational facilities. Now, what are the rules regarding educational facilities provided by the employer to the employee freely or at concession? If the employer pays or reimburses fees for the study of the employee, then it becomes a tax-free perquisite. That means the employer is reimbursing or paying the fees of the employee. That means employee is gaining the knowledge, is acquiring the knowledge, So if the employee is acquiring the knowledge and the fees is paid or reimbursed by the employer, it will become a tax-free perquisite. Second, cost of refresher courses attended by the employees and payment made by the employer. An amount spent on training employees is a tax-free perquisite. Sometimes the employee will go to attend the refresher courses, or employee will go to attend the training, then employer, if money is spent on his refresher course or training of the employee, it will become a tax-free perquisite. So if the amount is spent by the employer on employee for getting the knowledge, for training, for attending refresher courses, completely tax-free perquisite. Then when it is taxable, if the amount is spent by the employer on the family members of the employee, then it will become a taxable perquisite. When the employer provides educational facilities to the members of employee's family, either free of cost or at concessional rate, it becomes a taxable perquisite. Just now I told, if the educational facilities are given by the employer to the family members of the employee, then it will become a taxable perquisite. If the employer reimburses the educational expenditure incurred by the employee, is taxable perquisite to all employees. Reimbursement is different than providing the services. Reimbursement means, first of all, the amount expenditure is paid by the employee himself from his own pocket. Later on, that amount is repaid by the employer to the employee. That is called reimbursement. So if college or school fees are reimbursed by the employer to the employee, then it will become a taxable perquisite to all the employees. Next one is, if the employer runs the school or college, first cost per student is calculated. Sometimes the school or college is run by the employer themselves. Then in that employer run institution, the family members of the employees are getting the education. So Income Tax Act says in this case, it is a taxable perquisite. We have to calculate what is the cost of education per student. What is the cost incurred per student? How to calculate? We will calculate the total expenditure incurred by the employer in running the institution. That the total expenditure will be divided by number of students getting the education in that institution. We will get cost per student. Now, if the cost per student, if the cost of education is less than 1,000 per month per child, it becomes a tax-free perquisite. Income Tax Act has given the rule. If the cost of education per student per month comes to less than 1,000 rupees, it will become a tax-free perquisite. If it is more than 1,000, it will be taxable. If the cost of education per student per month is more than 1,000, it will become taxable. If the cost of education is more than 1,000 per month per child, then the perquisite is valued as under. How to calculate the value of the perquisite? Here it is given. Cost of education in similar institution. What the other institutions are offering. So what is the cost in similar institution minus rupees 1,000 per month? This is the value of the perquisite if the cost of education is more than 1,000 rupees. Now last and final, transport facilities allowed by transport organizations. The employer is transport organization. They are providing transport facilities to their employees. It will become a taxable perquisite in specified cases. So free passes issued or providing transport facility or concession by transport organization. Free passes or passes allowed at a concessional rate by transport organizations to their employees. Other than railways and airlines, remember, transport organizations we can classify into three categories, that is 4 categories: railways, airways, roadways and seaways. Out of these 4, railways and airways, this provision will not apply. The provision will not apply to railways and airways. It will apply to road transport and sea transport. Then it is applicable to employees of road and sea transport organization. This perquisite is taxable in specified cases only. The value of the perquisite is when free passes are issued, the value of the ticket. The value of the ticket is the value of the perquisite. Similarly, when concessional charges are charged, actual ticket charges minus amount paid by the SSC. For example, if a person is working in road transport organization, the employer is providing free passes to the employees or their family members, then it's a taxable perquisite. In specified cases, the value of the perquisite is the value of the ticket. Value of the ticket. If the tickets are issued at concessional rate, then the value of the concession is the value of the perquisite. free travel for official journey is not a taxable perquisite. When the free passes are issued for official purpose, it is not a perquisite at all, not taxable. Similarly, this rule will not apply to airline companies and Indian Railways. Just now I told you, this provision will not apply to Indian Railways and airlines organizations. That's it. So we have completed the 5 perquisites which are taxable in the hands of specified employees. Those are: first one, motor car; second, services of servant provided by the employer; third, free gas, electricity and water; fourth one, educational facilities; last one, transport facilities provided by transport organizations. That's all. Now we are coming to the third category of perquisite, that is special perquisites. Special perquisites from assessment year 2010-11. These are the new perquisites which are taxable from 2010-11 assessment year onwards. These perquisites are taxable to all employees, not only to specified, but every employee. Under this category, the following 2 perquisites can be studied. The first one is allotment of sweat shares. What are sweat shares? I'll discuss now. Second, employer's contribution to recognized superannuation fund, approved superannuation fund. Employer's contribution to recognized or approved superannuation fund. These 2 are called special perquisites which are taxable to all employees. First one, allotment of sweat shares. For the purpose of calculating the value of the perquisite, sweat shares means the shares which are allotted to the employees or directors of a company at a discount. At a discount or for consideration other than cash, for providing know-how, rights or intellectual property rights, etc. Sometimes the director or employees will give the know-how, will give the rights, intellectual property rights, etc. The employees or directors will provide these things to the company. So company will give them the sweat shares. Sweat shares are those shares which are issued at a concessional rate to the employees. Concessional rate to the employees or directors. Similarly, it may be issued for consideration other than cash. So it's a benefit to the employee. So Income Tax Act says it's a taxable perquisite. The value of the perquisite is fair market value of the shares on the date of allotment minus actual amount paid by the employee for the shares. This is the special perquisite number 1. Second special perquisite is employer's contribution to recognized or approved superannuation fund. So if a recognized provident fund is there or superannuation, what is provident fund? In the next video I am going to explain you. तो provident fund या superannuation fund में contribute employer करेगा, तो that will become a special perquisite. So contribution in excess of 1,50,000 per annum is taxable perquisite. If the contribution is less than 1,50,000, it's a tax-free perquisite. Only when the employer's contribution to recognized or superannuation fund is more than 1,50,000, then it will become taxable perquisite. The perk value is equal to actual contribution minus 1,50,000. Over 1,50,000, it is taxable. Note, if the employer's contribution to superannuation fund are not approved by CIT, Commissioner of Income Tax, so before giving this exemption of 1,50,000, Income Tax Act says the fund should be approved by the CIT, Commissioner of Income Tax. If it is not approved, then this exemption of 1,50,000 will not apply. Similarly, contribution to this fund qualifies for deduction under Section 80C. What is deduction under Section 80C? Next video I am going to explain you. But right now, remember, the contribution made to recognized or superannuation fund will qualify for deduction under Section 80C. Last one, interest credited in this superannuation fund is fully exempted from tax. That's all. So we have completed the perquisites which are taxable to all employees, the perquisites which are taxable to specified cases, and special perquisites. Lastly, I'll give you a list of important perquisites which are tax-free, which are completely tax-free. The Income Tax Act says these perquisites which are provided by employer to employee are completely tax-free. That I'll discuss in the next video.